Welcome back, folks. I am Jon Najarian. Glad to be back in Chicago, but certainly a very entertaining couple of days out in Los Angeles, and thought we'd show you a little tease there. If you'd like to see more, just go over to my Twitter account at Jon Najarian, and you can see, I think it's about a 2 or 3 minute video of us, sort of all around LA in the car, on the scooters, over in Corolla Studios at Corolla One, and all that fun stuff. So feel free, check it out, and let's get started with today's 3 at 3. Our disclaimer is that this is presented for informational and educational purposes only, that we are not your financial advisor, and you need to understand any investment before you make it, as well as the idea that every investment involves some degree of risk. Our intellectual property rights are, but not limited to, patents, trademarks, registered marks, copyrights on virtually everything you're about to see here. So please, before you reproduce it in any fashion, ask us. Please do share as much of links to this and so forth as your little heart desires. We love it when you do that. Thank you. All right, let me show you a couple quick ones here, and then we'll move on to fresh meat. This is Clove. One of you was nice enough to ask me a question about it. You'll be included in the questions at the end of this presentation. But yes, we had strong, unusual activity in Clove when it was $7.80. They were buying the May 9 calls. Now, when I posted this one earlier today, some people said, well, yeah, but the calls haven't moved that much or whatever, this or that. And first of all, that wasn't correct. But rather than correct the person, I just thought I'd say, I try to make it a point to let you guys know that I am buying an at the money whenever possible and selling a higher strike against it in the case of calls. If these were puts, I would be buying a put and selling a put underneath it. I do that because I can limit my exposure to volatility and time decay. And that's something I'd like to do on virtually every trade. I probably do it some 90% of the time. So just pointing out, so the stock's 780, they're buying the 9 calls. That's $1.20 out of the money, right? How did the stock do? Well, shot all the way to 1068. So from this one, 780 to 1068, nearly a $3 rally. If you own shares, let's say that you made a 1,000 share investment. You could have made $3,000 on that $7,800 investment. That's a fabulous return. But my option spread tripled from when I put it on, when this information was posted. And again, I can do that because I understand options. I understand time decay. You need to understand that before you make such an investment. But on the one hand, you made in the neighborhood of 40% return on a stock trade. That's phenomenal. On the other hand, I made a 300% return on an option trade. And this one, as you see, has been as high as 1123 today. So Clover Health Investments Corp. Certainly been an outperformer for us. And so has this one, MVIS. They were buying 10,000 of the May 22 calls. These, both of what you're seeing on the screen is exactly as it's presented to our subscribers. They never know what I'm going to talk about on TV because we have so many different trades that by the time I get on TV or Pete gets on TV, we don't know which one of the 20 or 30 trades to that point that we're going to go with. And CNBC could also nix it and say, you know what? I'd rather you did something more in the tech sector today because it plays more into what we're talking about, or in healthcare or whatever it might be. So, and of course, some of them I know ahead of time don't clear the guidelines. CNBC would like a $500 million market cap, or maybe even $1 billion minimum market cap for Pete or me to discuss an option. So some of them that make our trade posts do not make the show for a whole variety of reasons. But as far as this one, MVIS, stock was basically $23. They were buying the 22 calls. approximately $1 in the money, ITM, in the money. They paid $3.60 for those. So they went from, stock went from $23 to 20, all the way up, if you look there on the high, $25.75. That was the high today. Now look how much it's pulled back. It's back down to less than where it was when we got in, which again emphasizes a point that I always want to make with you and with anybody who follows our work, or even people that make fun of it. And that is, you need to have discipline on your exits as well as your entries. This applies to losses as well as gains. On my losses, if you're a first-time viewer, you know that, or you're about to hear, that on losses, if I pay $3.60 for an option, for instance, and that option falls to $1.80, I will get rid of it. If I paid $1 and it falls to 50 cents, I will get rid of it. My discipline is that at a 50% drawdown, I'm done. Move on, next trade. On a double, I take off half. So if I paid $3.60 and it doubles in price, I take off half. Now, as you guys might imagine, the spreads that I do, for instance, 22 spread against the 25s and things like that, mean that I put a lot less money on the table, because for every option I buy, I'm selling an option against it. I also have a much easier path to a double or a triple when I'm doing that. So that's why I like the strategy so much of the one-to-one that I describe virtually every day. Here I would say, if you used any discipline, forget about 25.75. How about just 25? That would be $2 full higher than where you got in. So if you got into stock and put $23,000 down for a 1,000 share position in the stock, you'd make $2,000 from 23 to 25, and you'd say, fantastic. And I wouldn't say that you're wrong. However, I put a lot less money on the table because I bought the right for the 22s, which we know is 360, but I sold the upside call against it, made over 150%, and said, thank you very much. Now, part of my discipline, folks, as you may have heard, is that I sell half on a double, which I did. And then what I like to do is, let's say that I paid $1.40 for this spread and it went to 280, or I paid, $1 for the spread and it went to 2. I'm going to take half off and I'm going to set a stop order at about $1.75, 25 cents lower than where I exited. If we pull back to that level without remorse, without mercy, I will just bang that spread out, the rest of it. On the other hand, if it keeps running and it goes to $3, it goes to $4, it goes to $5, what will I do? I'll keep rolling that stop up underneath it, because that way I know that I will eventually, when it pulls back, which virtually everything does, trees don't grow to the sky, I will take profit and put a big chunk in my pocket, which I was lucky enough to do here in MicroVision. Bang. Daily Crypto Bite. All right. Daily Crypto Bite, we do every morning at 10 a.m. Eastern Time. 10 a.m. Eastern, I'm joined by CJ and Monty. These are two gentlemen that built out our cryptocurrency curriculum. They can teach you about everything from wallets to DeFi to altcoins and brokerages. We have a relationship with Voyager. They sponsor the show, but we also understand that people trade where they want to trade. We know if you trade through Voyager and you use our little promo code, which is Rebel25, they'll give you $25 in Bitcoin just for signing up. But we have a full curriculum. We have a chat room over at marketrebellion.com. To see it, just go marketrebellion.com/try crypto, and you can check it out for $1, $1 for the first month. And then if it's not worth it, thank you very much for checking it out. But you're done. $1 is all you have to pay. On the other hand, if you like it, you can continue on, and that's $29. It's less than $1 a day, because we are 24-hour-a-day chat room for crypto, because that's when it trades some of the most heavily is at night. Our evening happens to be the big market over in Asia, and we like catching that. So check it out, marketrebellion.com/try try crypto. And now for today's 3 at 3, starting off with PBI. Pitney Bowes, bullish call buying, stocks 950. They're buying 13,000 of the May 10 calls, paying 45 cents. So you could buy that call and you could have a double easily if the stock starts moving to the upside, or you could buy a spread, which is what I did because that's what I do. These are also May options. These options expire in approximately 4 weeks. So be aware of that fast time decay in these, which is partly why I like to exercise that extra degree of caution by going 1-to-1 in the spread. Now it's moved up to 984, so it's up about 30 cents from when we first talked about it. You see on the far right side of that screen that it also jumped all the way up over 10 already today. So we caught a nice move already. And the volume today, 4.9 million. The average volume over the last 10 sessions, 1.9. So in other words, more than double as active as it normally is. And look at that back in February when it jammed up to 14. Is that in the cards again? I hope so. That's the first of today's 3 at 3. Now I'm showing you Market Rebellion and our YouTube channel. We are very proud that YouTube thinks enough of us to give us our own channel, let us stream free on there. And we've had over 17,000 of you sign up and join us. We really appreciate that. Thank you. You can do that by going to YouTube and typing Market Rebellion, and you get all of our videos for free. Every single video for free. We put them up as quickly as we can after the events, whether that happens to be my 60-second video, the take, my 3 at 3, interviews that we do with smart traders and so forth, interesting people around the world. I'll be at a big Wall Street conference next week down in Mar-a-Lago, where 2,000 of some of the biggest traders and family offices will be down there at this conference in Mar-a-Lago Wednesday next week. And I will be keynoting down there along with the founder of the conference, Jason Lyons. It'll be a fun time. But anyway, we'll put up as much as we can on that site. Our YouTube site, again, YouTube, type in Market Rebellion, click subscribe, and you're in. Free. All right, second trade today, HOG, which is Harley-Davidson. Bullish call spread, stocks just under 49. They're buying 6,000 of the July double nickel, 55 calls. What did I do? I bought an at the money, sold an out of the money. Why? Because these calls are $6 above where the market is right now. I make so many trades, folks, that I like to have the odds moved into my favor as far as I can and not have to worry about the positions. If I just have a bunch of premium hanging out there at $1.45, I worry. If I pay $1.45, but I've collected 80 cents somewhere else, by selling a call against the call that I bought, then I sleep easier. So that's just how I like to play it. Again, stock's about 49. They're buying the July double nickels. There's me talking about this trade on the halftime report. And there it is, moving up to 49.86. Again, when we first talked about it, under 49. So it's up about 86 cents, give or take. It's been as high as 49.94 already today. And the volume, 2.2 million versus an average of 4.3. So about inline volume. But look at that moving up from the low that it hit in 2020 all the way into today. I like it, like the chart. If you'd like to learn how we do what we do, how you can apply it to your trading of stocks, not just crypto, but which, by the way, crypto is starting to list. They've already got Coinbase and Tesla on the Binance exchange. They have a token for that that tracks that. They also are adding Microsoft and Apple. So that's going to make things interesting. Anyway, though, marketrebellion.com/UOA. That is marketrebellion.com/UOA for unusual option activity. You can see all about how we do, what we do, and the adjustments we make. Check it out if you'd like to join. Thank you. Third trade today, I went in the cannabis space and I went with Tilray, one of the high flyers from 2 or 3 years ago when it traded over 300. You remember that? I do. Now here it is. It's moving back up. It's $19.16. They're buying the 07 of May. In other words, the first week in May, the end of next week, folks. That would be May 7th. The end of next week, May 7th, they're buying the 20 calls. So just out of the money, about $1 out of the money. So you can still buy the at the money and sell and out of the money against it, 1-to-1. As long as you do that, there's no increase in the amount of exposure you took on. And 7,800 times means 780,000 share equivalent. Bang. There's a graph of Tilray, 1940, just a little bit higher than where it was when we cited that this morning. So 1940 been as high as 1955. It's on the upper end of that range right now. And the volume, look at that. That's in that lower right quadrant. If you look at your screen, folks, volume today, 23 million, average volume last 10 days, 14.5 million. So I think something's up, something's going on. I like it. I'm riding the wave. You have to decide if that's an appropriate investment for you. Questions? Send them to me on Twitter at Jon Najarian. That's at JONNAJARIAN. You can also check out that cool video we showed you at the beginning by going and following my Twitter and pulling it up. All right, let's talk about Clove. Buy the effing dip. And he is a Wall Street bets degenerate, apparently. WSB_DEGENERATE. Can you explain the call option interest, open interest, and what it means for the available float, effective short interest and potential implications? Sure. Directly, nothing, but there can be an effect, and I'll describe it right now. Every time you buy an option or I buy an option, buy the effing dip, every time we do that, somebody sells it to us, of course. Sometimes it's somebody who's owned it for a while and they're selling it. Sometimes somebody who has never, ever traded that, but decided to become an option seller of that because they want to bet against it or because they own stock and they're selling covered calls against it. There's a whole bunch of reasons that somebody might sell those options to us. But if somebody is a market maker and they sell a bunch of calls, they're going to buy a bunch of stock. Trust me, they do that regularly. And that's what I did, in fact, when I was a market maker. Now, obviously, you'd much rather hedge with an option, but you don't always have that opportunity. So if somebody's buying a bunch of deltas from you, meaning my exposure is now to the upside, a risk exposure to the upside, to mitigate that, I'm going to buy some stock against it, which would affect the short interest in the stock. Now, as far as the open interest in that option, if nothing had ever traded and I stepped in and bought 100 options, the open interest would be 100 for that day until somebody traded it again. And perhaps I sold some back out and reduced the open interest because I am the open interest. I am that 100 contracts. Somebody short those options, I am long them. If I start selling them out, it will take the open interest down. That's the way open interest and so forth works. That's a great question by the effing dip. I appreciate that you shared that with us. Airbnb, which the symbol is, of course, ABNB. And this comes our way of Era Trades, @ARATRADES. Jon Najarian and 3@3. Dear Jon, I would like to hear your view on Airbnb. Thank you. I love it. This was the only part of the business that was growing for Expedia. They own VRBO, which is Vacation Rentals by Owner. I'm sure most of you know that, and probably Aratrade knows that. But they said that was the only portion of their business that was really growing and growing very well. So I got to believe that Airbnb, which is a monster, they are so big in this space that I got to believe they are also growing pretty strong. So would I buy Airbnb at these levels? I have in the past. Let me see what our most recent ABNB, what our most recent purchase was. Just 5 days ago, I bought back into ABNB when the stock was trading at 176. And right now Airbnb. Live quotes, folks, 179.79. So it's up about $3 over the last 5 days. I'm still in my trade. I like it going forward. I appreciate you reaching out to us. Thank you. Now let's get to our final. I think this is our final. Yep. Bicyclist. All right. The bicyclist's handle on Twitter is @Daniel, DANIELJ, TERRY1. All right, Daniel, let's see. My question is this: Berkshire B, which is Berkshire Hathaway. Why do they do the announcements and meetings on a Saturday? Markets are basically closed. Yes, they do. And Warren Buffett has liked doing it that way, and Charlie Munger too. So why they do it? They're just like Apple and Microsoft and Facebook. And by the way, Apple and Facebook have earnings tonight in 35 minutes or thereabouts. They'll be after that, but that's when the market will close. They're not under any obligation to do it the day they release. They will decide to release on a Saturday or Sunday. They could do so on a holiday if they so chose. Any stock could do that. I think because of Warren Buffett more or less training people and his legions of fans, he likes people to be able to travel to Omaha for that big party every year as well, where they can all get together and talk about how smart they were to buy Berkshire Hathaway back in the day, because they were, because that's been a fabulous performer. So that's not me shedding any shade over at Mr. Buffett. He is indeed the Oracle of Omaha and has done a great job. So why do they do it on a Saturday? Because Warren Buffett wants to, is the simple answer. Thank you, Daniel Terry. Folks, I hope you have a great day. I'm going to save a little bit of my voice for Anthony Scaramucci, because I will be on with the Mooch and we will be talking cryptocurrency. I'll get a chance to talk about our hedge fund, because we're bringing out a hedge fund on crypto. We are really looking forward to it. I will be able to share much of that with you. You can go to Skybridge and sign up for it right now. It'll be at 4 p.m. Eastern time today. I'll see you then. Bang. Have a good one, folks.